There are some very important things happening right now, and I'm not just talking about a single data point, a headline, or one specific chart. I'm talking about multiple things unfolding at the same time on different levels. And when you put them all together, they start to align in a way that's very interesting and very relevant. So today, we're going to break down three key things. First, we'll talk about the broader market, how money is positioning itself, and what could happen next. Second, we'll focus on Bitcoin, what it's doing technically, what do you expect in the short term, and how that fits into the bigger picture. And third, we'll cover something that most people are not analyzing properly, the situation between the United States and Iran, and why I believe the most likely outcome is actually an agreement, not a war or further escalation. All of this is connected. Everything makes more sense when you look at it together at the same time. They move because of liquidity, positioning, and risk perception. If you understand those three things, you get a much clearer picture of what's really going on. Right now, we're in a very interesting situation. On one side, the more conservative money, the so-called smart money, institutional capital, has already done what it needed to do. It moved into safer assets, short-term treasury bills, low volatility instruments. In other words, a large portion of capital is already protected. And this is key, because when money is already protected, there's simply less left to sell. Think about it. If those who wanted to exit have already exited, who's left to keep selling? Now here's where things get interesting. While that defensive capital is sitting on the sidelines, hedge funds are positioned in the opposite direction. They're heavily long, exposed to upside, and that creates tension. If the market goes up, those long positions get reinforced. But if the market drops sharply, we could see a serious problem margin calls, forced liquidations, cascading selling. That would be the real trigger for a major drop. If that happens, the money currently sitting in safe assets can start flowing back into the market. And when that capital meets already positioned hedge funds, that's when you can get a very powerful move to the upside. Personally, I think that second scenario is much more likely. Could we see drops? Sure, volatility, but as long as the market keeps absorbing shocks, and that's what it's been doing, the main scenario remains bullish. And that's what it's been doing, the main scenario remains bullish. And there's one more important point. Downside risk is relatively limited, but upside potential is much more open right now. And that matters when it comes to positioning. Now let's talk about Bitcoin. Bitcoin recently reached a very important resistance. Zone the 73K towers in the 73K 74 44 area we discussed in the previous video Bitcoin, or rediscussed in the previous video Bitcoin. One tried to break it multiple times, but so far it hasn't succeeded. And there's something that caught my attention. The latest move into that zone happened over the weekend. That's a red flag. Why? Because strong, sustainable moves usually don't start on weekends. Institutional volume isn't really there, so big players aren't active in the same way. What we often see instead is a move up, followed by a reversal, and that's exactly what happened. Right now, we're basically back where we started before that breakout attempt. Technically speaking, when price tries to break out of a range, fails, and returns inside, the most common outcome is a move toward the lower end of the range. And in this case, that lower range sits roughly between 60K and 69K. That's what I expect in the short term. I can't give you an exact date, but structurally, that's where the market is pointing. There's also a key factor, liquidity. There are still a lot of long positions open that could be liquidated at price drops, and that tends to act like a magnet. On top of that, on-chain activity doesn't show strong pressure. There's no urgency, no significant volume. That doesn't look like a market ready to explode upwards. It looks like a market ready to explode upwards. It looks like a market lacking real strength in this move. But here's something very important. A move down to 60K does not mean the market is dead. It means we're still in a range, and in a range, you trade the range. Let's zoom out. Short-term analysis is one thing. Structural analysis is something completely different. And this is where things get really interesting. If you look at Bitcoin's volume, you'll notice something important. Volume spikes are getting smaller while price remains relatively high. After long periods of consolidation, markets tend to move strongly. The longer the range, the bigger the move that follows. So the full picture is this. Short term, Bitcoin may move toward the lower range, 60K, the 60K dollar range, before attempting 74K again. But in the medium term, the structure remains bullish. And if we see a drop into that zone with low volume and a quick rebound, that would confirm real accumulation. Now let's talk about something different, but deeply connected. And surprisingly, both sides will walk away with something. Iran is playing a smart game, applying pressure, shaping the narrative, showing strength, but without pushing things to a point where the USS is forced into a full escalation. Because historically, when the US escalates seriously, the outcome is predictable. So instead, what we're seeing is controlled pressure. The public narrative, speeches, movements, political messaging is largely for internal and global perception. The real negotiations are happening off camera. If a deal happens, Iran gains sanctions relief, access to global markets, frozen assets, and internal stability. The US gains control over Iran's nuclear program, stability in key trade routes, and reduced regional tensions. Key trade neutrality it's a classic balance point where neither side wins completely, but both avoid losing much more. And here's an important clue. The markets. We're not seeing real panic. No extreme moves suggesting that major players expect a full-scale conflict. And that's rarely a coincidence. Markets usually price in reality before it's announced. So to wrap this up, everything we discussed, markets, Bitcoin, geopolitics, comes down to one thing. This isn't about predicting the future. It's about understanding how money is positioned, thinking in probabilities, and managing risk intelligently, because the market is always right. Your job isn't to fight it, it's to listen to it. Right now, we have a market that's holding strong, Bitcoin moving within a range with a possible short-term dip, but clear accumulation underneath, and a geopolitical situation that points more towards stabilization than escalation. If you enjoyed the video, leave a like, subscribe if you haven't already, and I'll see you in the next one.